Hey traders, this is Christian from Hertz Tribeca Trade Group, and this is your end of week recap. It is Friday, August 13th, so another week in the books. We are officially halfway through the month of August. It is Friday the 13th, so be careful out there today. But let's go over this week's performance. Before we do that, risk disclaimer in front of you. Everything that we're going through here is for information purposes only, not giving out any advice or recommendations. This video is for education purposes only. If the video is a little bit blurry, it is because YouTube takes a long time to render their high definition video. Just give it a little bit more time. Well, before we go over the week's performance, just a quick minute on the recap of today's performance. Theme of the day, you could see, I don't think it's that hard to kind of come up with a theme here, but again, breadth wasn't all that strong. More names kind of going down after the open, more groups, right? You could see I highlight things that are listed in this column over here is the percentage change from the open, right? Because I like to look to see basically if we have a day that's more accumulation or distribution. And when I see more things in the red like this, I highlight things that went down over 1% from the open. And you could see that there's a list of about like 10 things. And we don't even have one thing here that went up more than 1% from the open. So again, just kind of gives you a sense of the difficulty level in this market. We're not seeing a ton of days where we're seeing massive accumulation right now. It's kind of it continues to be a grinded out type market. And I don't know. Maybe that changes next week. We certainly don't have a lot of sell signals or anything like that. We do have a little bit of the markets being a bit extended after this week's performance, but it's going to be interesting. We have options expiration next week, right? That has been, I think, the last 2 months. It's coupled with other events. Last week, I'll go over the S&P chart in just a second, but well, we might as well talk about that now. But that's one of the events to kind of watch for next week. Keep in mind, I think the last time that we had option expiration a month ago, we had a number of other events to worry about. So I don't think that was just the only thing that's been kind of driving this mid-month kind of corrections that we're seeing the last few months. Remember, a few months ago, it was the last week of the year that was giving some problems to the market, right? That was specifically end of January, end of last week of February, last week of March, and then something kind of changed a little bit, and it's now it's been the last 3 months. It's been that middle week, the week with option expiration. So it's tough to say, hey, are we going to get a fourth month in a row of distribution, right, and a little bit of volatility. There are some similar patterns here when we look at that, right, where we've been extended the first couple of weeks of the month for the last 3 months. So it makes sense to me to have a little bit of a breather next week. Do I have a crystal ball and do I know that for sure? No, I don't. So we could also continue to grind, and then, it doesn't necessarily have to be next week. Maybe we see a little bit of volatility the last week of August too. Those are all things that I kind of think about. Those are all things that I try to strategize around. What we talked about in the midday video that I send out to members is that, what do you think is your risk to do you think it's better risk to return right now or return to risk? But it's really your risk return ratio. Is it really a good place to be starting a bunch of new positions here? Or is it better to be kind of, taking off some positions and taking some targets and some things, right? I guess it depends a little bit of on your outlook. For me, it's a little bit of like, hey, I think we've had a good run so far this month, and it typically difficult month of the year in terms of seasonality, which everybody knows and everybody's been talking about. So for me, it's a place to try to take more profits and take some trades off, and be positioned a little bit lighter than I normally am. Now, now I don't now I don't take all my positions off, but I do try to lean down some positions. So in any event, that's kind of where we are right now. And before I get over to this week's performance, but yeah, I mean, you could see some things that we're going to talk about here. If you look at what outperformed for the day, and if you look at, first thing that kind of stood out to me was consumer staples, right? So again, these are not sexy areas of the market, but it is what it is. And I cover whatever is outperforming and what I think is notable for the day. And while I don't think it's an area that I want to really put a lot of risk towards, it is what it is. The consumer staples are breaking out. The utilities have been on a really nice run. I know that's getting a little bit more attention today after they've already moved decently, but these utilities have been really strong. And then kind of another defensive group, which is the REITs, look like they're ready to kind of move ahead. I tend to look at this VNQ ETF, but you can look at anyone you want. And if you want one ETF that looks at low volatility equities, it's SPLV. So it could be that if you think about this logically for a second, it could just be that that investors are kind of thinking like they want to be in the market, but they're a little bit afraid of the typical August, September volatility that we get. So could be that people are kind of hiding out in some of these places. All right, we'll see if there's anything else for the day that I wanted to note. I think that's it. We'll get into some single stocks in just a minute where I thought that there was some bright spots. But yeah, clean energy down 3.6% for the day. Solar, which there's a lot of overlap between those two ETFs, down 3.2%. Clean and dirty energy, pretty negative looking, right? And so it's kind of interesting to go through these charts. I don't have anything on in energy. I've gotten some questions about it, but it doesn't look very healthy. There's support down here, but remember when we heard a couple months ago about, hey, what a great opportunity energy stocks are, right? That was when we were here, right? And notice what that there was some popular views out there on in the financial world about energy stocks, and they've been a very big underperformer over the last month or so. What about the clean energy stocks? Have they been the place to be? No, they haven't been the place to be either. So it's kind of interesting that the theme has been that way. That this year it really hasn't been a clean energy year either. There's been little episodes of certain areas of clean energy that have been strong here and there, but really they're not trending. They're kind of going sideways, and I had tried to get back into the solar ETF in the TTG Trend Portfolio, and I said, hey, my stop will be the 200-day moving average. And the first day it broke the 200-day moving average, I got out. And I won't revisit this trade until it gets back above the 200-day. But just kind of interesting to try these things. But they're not acting like they were the last couple of years in terms of clean energy, solar. And kind of interesting too when you look at who's in office. Not to be political, but these things are not outlandish to kind of say. Normally a Republican president is going to favor energy stocks, and actually clean energy outperformed very well over that stage. And a Democratic president tends to favor more clean energy things, and that's underperformed since. So it's not always what the logical things that you think whoever's in office, and that's why I tend to try to ignore politics as much as I can especially in trading. But that's a good point I think to make, is that hey, you got a Democratic president in office, and what's going on with these clean energy stocks? Not doing very well. All right, so that's just the one point. There's a lot more to kind of get through here, and I won't dwell on every little point, but just interesting to see the underperformance there. Again, the banks were a bit weak today. That was the big bright spot of the day. What doesn't help the banks is when the bonds are rallying like they did today. TLT was up 1.6%, so yields went lower today, right? And if we look at this chart, which I've been talking a lot about, the bond chart recently, but here's the bond futures, right? Talked about the 80% rule was just about complete. We traveled all the way through from top to bottom, and you could see the big bounce. So a much bigger move than I thought that we were going to get today. Now, you would typically think today, okay, interest rates, going lower, right? Because again, we're looking at a bond chart, so bond prices go up, yields go lower. Usually, what works well is growth stocks. Well, take a look at what the ARK fund did today, right? Down 1.4%. Nobody's really favoring this group today. The ARK ETF was down 2.4% for the week. So again, another group that just it's not where the performance has been year to date. And we look at, I look at all areas of the market just to kind of make some observations. But this group is just not cutting it this year. Massive underperformance this year, even though a couple of their names did pretty good, right? The Unity software did rise up to that version point of control that we talked about earlier, but really nice performance out of this Unity. I've been giving this name a hard time for months because it hasn't done anything, but really nice outperformance this week. And an Upstart too. My goodness, what over 200. I think a lot of people were thinking it could go to 200. Well, it's actually past there. I see on my charts 208, which would be another extension off of the value area. By the way, hindsight 2020 here, but look at how slim this value area is. So if you're not familiar with this concept, I'll explain it in just about 10 seconds here. But it is volume at price, right? It's the volume, where the volume occurred from the last period, right? And then what we do is we draw what's known as a value area forward based on the price action from the previous period, which was last month, and we make a support and resistance level based on that, right? And it's statistically significant. And notice how narrow that value area was, right, for this month, right? What does that mean? It's kind of like when you see the moving averages get wrapped around one another, right? We call that coiled or coiling, right? Well, it's a similar concept. When these value areas get very tight, there's usually a big move that happens. Not 100% of the time, but take a look at this at the width of the value area for Upstart versus all the other months, right? It's about the narrowest one. This one was narrow too, and this one was a decent move as well. So just something to kind of keep in mind when you're looking at your charts. When you see the price action like that, a decent move could be coming. Take a look at the volume accumulation as well in the stock this week. As expected, when a name really beats like that, it can get pretty fun. All right, so that's a quick summary on that. I mentioned I would talk about this week's performance. SPY did finish up just about 1% for the week. The diamonds actually outperformed. Small caps, you're killing me, smalls. Just down another 1% sideways. I'm not even going to look at this chart for now. I want to move on to some other things, but it's been that way for a while now. The Qs did not, we saw some sell programs that went through on a couple days this week. So they did finish positively for the week, but certainly that's not where the momentum was. The upside momentum was this week with the Qs just barely in the positive there for the week. Interesting here too. I know international areas don't get that much attention other than what's been going on with the Chinese internet names. But take a look at what international developed markets did, right? So areas like what's in this EFA ETF. It's a lot of Europe and it's a lot of Japan, and they outperformed quite nicely this week. Bonds were actually up this week. After moving down earlier in the week, so they finished up positive. And gold was up. Also, if you look at these two ETFs, this is growth, This is value. So this was a value week. And if you look at the sector breakdown, look at what outperformed. Big week. Metals and mining up 5% for the week. Steel also 4%. Some decent overlap in those two ETFs. Materials were up 2.7%. The home builders locked in another week of gains. Staples, transports had a big week. Financials, utilities, industrials, two of the sectors that I went long back on a week ago last Friday, before I left a little bit early for my little weekend vacation, were the industrials and the materials. So that worked very nicely. And I actually rolled that materials trade over midweek and ended up taking that off. I think that was yesterday that I took that trade off. So really nice. But again, not all value outperformed. We'll look over to the right side and you see energy over there, which we've already talked about that. The semiconductors, I just wanted to bring up this chart just for a quick second. One of the areas I like to see the semiconductors lead. Notice that we're into support. I do have a long position on in SMH, but I did not add to it. I definitely thought about adding it today. It'll be something that I look at next week. And but this would be a logical place for this to bounce, right? Breakout, move back into top of value support. So recheck into support, and let's see if this gets this area to kind of bounce a bit. AMD was a nice name today. This was a trade for me today. I was kind of stalking this AMD over the last couple days. Whenever we get a breakout and then a move back into these moving averages like this, it gets on my radar, because usually buyers come back in to support it after there's been a little bit of profit taking. The 1 hour chart was particularly useful for this name. I showed this chart a few times this week in the Tribeca Trade Group trading room, that we were basically holding the bottom of value pretty well, and then we got going a little bit there today. So I think the semis will definitely be one area to watch next week, and I think that's it. In terms of what could we get next week. We'll definitely be going through our charts and doing our homework this weekend to think about how I want to be positioned and what names can continue to outperform. Is it going to be more of the low volatility stuff that we covered, the consumer staples, possibly the REITs? I've got a couple names in the REITs that I'm looking at. Even though they're boring, hey, if they go up 1 or 2% next week and everything else is flat, it is what it is, right? We trade what's in front of us. At Tribeca Trade Group, we're not perma anything. I tend to go with whatever is outperforming. Sometimes it's not what I want to see outperform. I don't want to be really positioned in REITs and things of that nature that are slower moving. But you got to take what this market gives you, right? So anyway, here's the international performers. I will go over a couple of charts that I thought that were interesting for the day. As I mentioned, I would go through just a couple of these names, but I really like, again, it's a slower mover. It's not one of the faster moving FANG stocks, but Microsoft looks great, doesn't it? Earnings didn't really do much. So this was back, it made this high back on 7/23. It's almost been a month. So it's been going sideways for a month. So why not, right? Hasn't had a big move down, but still, I think the chart looks pretty darn strong. What else did I want to cover for the day? Starbucks is a name. I actually got long some Starbucks today. I just think it's good risk to return in here. This thing got a little bit of extended before it reported earnings. And since then, the name's been 125 down to 116, about a 10% move to the downside. And we're right into some support. Not all the way down to the bottom of value, but we're into this 50-day moving average. I thought it was a good place to kind of look for a bounce. Am I looking for this to be a rocket ship name? No. Maybe 116 to 120, 122. Right, I think it's the options are not particularly expensive, so that was a name that I tried today. Another name too that I'm looking at for next week, just to kind of throw out a couple ideas, and we'll kind of keep this video short because it is Friday. But Floor and Decor is another name too. Notice how it's testing back here after earnings. Really ran into the talk about running into the earnings report. Floor and Decor, big run, and that was the high. And I don't think there was anything really bad on the earnings. It just ran a little bit too much. Well, it's into support. You got a nice support level to trade against. 115. Notice that was the previous peak. So that's a name, and I've got a number of other names, but like I said, I'm going to keep it short for now. Here's my trades for the day because I always show you my trades. I'm still long Apple. I talked about that name yesterday quite a bit. It's fine after a big move like yesterday. Apple does that, right? We'll have a couple days where it doesn't do anything. To me, Apple's one of the names that really exercises my patience. But for now, I'm in some October calls, and I'm cool with that. I've got some time. It's not a real volatile name. If I get a little bit of a dip, I'll probably add or put back a target that I took. I traded a little bit of Tesla today. Had to be quick with that one. The last bit of the trade, I kind of got caught on it. ZS was a name that I got into yesterday. I got out of that name. Datadog 2, which I think I may have gotten out of this one a little bit too early. I have a tendency sometimes to do that. I thought that we would basically, 135, 136 was a level that I was looking for. I positioned into this thing right into here, which worked very nicely, by the way. Datadog was a name, again, so this is important. This is what we talked about going into earnings season, that we were going to find names like this that could be a new leader or a new nice name to kind of trade for the coming months. Get big gap up, settled in a little bit. Again, these names are strong. They're not going to give you a move all the way back into here. So I started to kind of position into here, and this trade worked very well. So I'll look to revisit this name next week again. But where's my Datadog trade here? Yeah, 134 is actually where I got out of it. Positioned in there at 126. And then I kind of trimmed some positions here because that's how I wanted to kind of be positioned for next week. Out of some Nvidia, out of some Home Depot, out of some GM, out of some Fast. So I took off like about 4 or 5 positions today. I added a couple in there too, but I did more trimming, and net, I was a seller today, and that's how I want to be positioned for next week. So one other quick thing here before it's the weekend, we go out and kind of celebrate, relax, get outside, maybe grab a beer. We've redesigned our website. We're still kind of it's still a little bit of a work in progress, but if you go to the link that I've got mentioned on here. Here's our programs. Take a look at them. We are doing some new things, like we do have, if you can't trade every day, we now have a part-time program for members where you can kind of get involved and you can get my commentary every day. What we've decided to do, I've gotten some member feedback, and I'm now providing like a quick 5-10 minute video every day around lunchtime, just to kind of tell you some of the trends, to tell you what I'm thinking for the next couple of days, how I'm positioned. So it's an open position review, as well as some things that I'm concentrating on. And just like we kind of talked this week, right? We outlined that the inflation reports would be interesting, the bond auctions, right? So I always have my pulse on things that can kind of move the market a little bit, and things that you should be prepared for. And then we kind of drill into our single stock setups and our sector moves and so forth. So if that's something appealing to you and you want to be a little bit more prepared, I saw a lot of traders who were scratching their heads on last Friday by the moves. I wasn't. Right? We knew that a strong jobs report was going to shake things up and drive some sector rotations. So if you like to be a little bit more prepared in your trading, that's what that's my bread and butter, right? To kind of get a little bit ahead of the game. Also, we were, one of our best trades for the week was what we did last Friday, right? I spotted those sector rotations. I got long industrials, long materials, and those worked really well. So we were ahead of the game, right? And also, you saw me tweeting out this weekend about steel names. Nobody was talking about the steel names last weekend. People were talking about them on Monday and Tuesday because they already started to move. But we noticed, names like STLD, right? Which had a really nice check back into support right in here, right? This is one of your best performing areas, right? We were all over that this weekend. It's funny, sometimes when I send some of these charts out, right, they get very little likes. When I send something out that's a popular name, right, everybody's like, oh great, I'm Upstart, I love it. Which again, reason to be excited about that name. But I get when I send out an STLD, no, like 2 likes. Cliff's Resources was another one that I thought was an interesting check back into support. But so anyway, so on and so forth. Guys, have a great weekend, and check out Tribeca Trade Group. Try the part-time membership. See what you think. Give me some feedback. I would appreciate it. And guys, have a great weekend.